About their fabulous quarter, Rajesh Rajurikar, ED Auto and Farm Sectors at M&M, joins in on the show. Rajesh, hi, good morning. Great to have you on ET now as always.
Hi, good to be on the show. Thanks for having me.
Rajesh, I guess all highlights were in Hyderabad over the weekend. Give us a quick synopsis of all the fabulous launches that you had.
Well, we missed having you there,
Yes.
yeah, but it was a good, long, and exciting weekend ahead. That just went by. We showcased two of our Born Electric models there, which we had actually showcased for the first time in Banbury in August, on August 15th last year. One was the BO5 and the XUV E9. So these were, two of the, under the two brands. As you know, we're doing a two-brand strategy. We showed one of each. But what really I think got everybody's adrenaline going was the BE Rally version, which, in a way took us from race to road to off-road, because the rally version is really a very fabulous looking exploratory vehicle. In a way, we think about that as the electrified Thar equivalent in the electric space. So, that I think really got everyone going. And also, positioning our electric as a lifestyle, because we set these reveals around a fashion event. So we called it actually the EV Fashion Festival. So it was a nice event.
Right. I know we missed all the fabulous launches at Hyderabad as well, but maybe next time. Let's now talk about the fabulous quarter that you as well had. And, the tractor industry growth, Rajesh, is expected to be over 10%. What kind of growth are you expecting for the full year? Because I recall in our last interaction, 2022 end, you were talking about for the tractor industry demand to actually grow, you will require higher government spend. And it already being the run-up to the election year, you don't see as much of it already happening. But what's the visibility that you have going forward?
Yeah, so firstly for this year, which is the F24 year, which will end in March, we've said that the industry would grow upward of 10%. We significantly upped that number from the last interaction, when we were saying it will be in the region of 5-6% in that arena. So I think that we've up to 10%, and that was enabled by the following positive factors. One is we saw terms of trade for farmers improve, and this came out of mandi prices being much higher than MSPs. So, that has led to a very positive sentiment. The second is the crop that's coming out now, unless something goes wrong in March by way of too much heat or off-seasonal rain, is going to be a really good wheat crop. So there's a lot of positivity around that as well. And we have seen improved government spending in the second half of the year. So, these were three very positive enabling factors which have enabled Q3 and make us positive about the Q4 as well, which is why we've upped the industry forecast for this year to 10% plus. We haven't yet put out a number for the year F24. There is, one critical uncertainty around the monsoon. We've had 4 years of normal monsoon, which is unprecedented. So let's see what happens as we go into F24. And, you've rightly raised the question around government spending and how that's going to play out in the year F24.
Morning, Nikunj also joining in.
But just to, I think just to play out.
Yeah, please go ahead.
Sorry, I'll just complete this and then give it back to you. 920,000 plus is a really good size of industry. So the tractor industry is on a really high level of base. We've seen in the last 3 years a CAGR of over 9%. So, on a very good base, we're seeing good growth. So, overall, we feel good about the state of the industry.
My next question is about the EBIT margins of the auto business. Now, you are a clear market leader in the SUV market. It's a niche market. It's a market where margins, technically because you are a niche player in a niche product, are decent. But your margins are nowhere close to 10%. So progressively, because you are in a niche market and your product launches have been so strong, is there a linear structural improvement in margins, which is that with each coming quarter, with each passing year, margins will only head higher in the automobile business?
Yeah, so, firstly, a couple of clarifications, corrections, if I may. SUV is no longer a niche segment. SUVs are now 50% of the passenger vehicle market in India. So, to say that SUVs is niche may have been a thing of the past, but today SUVs is really mainstream. In this mainstream segment, we have a significant presence. So by way of revenue market share, last 4 quarters, we've been number one in an industry which is 50% of the total passenger vehicle market. Even by way of volume market share, last 3 quarters, we are in the top 1 or 2 players. So, we are playing a mainstream volume game, doing more than 30,000 vehicles a month consistently over the last few months. Last year in quarter three, at the end of quarter three, we had said that we would expect our margins to go up by 3 percentage points, and we've delivered that. That we had said will happen in the medium term. We also have the best margins amongst all published auto results by way of the best OPM, which is way above 10%. The one thing that I just want we always clarify that in an upward commodity cycle, when we take price increases or pass on costs, so there are you are in an inflationary environment, you're not able to pass on the margin on top of the cost, because every player is attempting to make sure they pass on the costs. We've seen a huge inflation in the last 2.5 years, almost 17-18% on commodities, plus the regulation change, starting with the BS6 in 2020, which is just 2.5 years back, coming into the 6.2 right now. So there is an inflationary environment, and in that inflationary environment, percentage margin will always be under pressures. But in spite of that, we've seen an over 3% improvement in the margin, taking us close to 6.8% as a PBIT margin for the auto business.
Okay. The SUV launches have been super duper for Mahindra and Mahindra. Long waiting periods, great acceptance, strong order booking. When will things start improving on the supply front? For shareholders, ultimately what matters is that when will the demand translate into cash flows? When will the demand translate into profitability? Do you see things improving and changing significantly in this calendar year?
Yeah, so firstly, if you look at the traction of data, we've moved up from something like 19,000 a month in SUVs to over 30,000 a month. So there has been a significant change in the traction by way of converting demand to supply. And which is why we are seeing such strong growth, and that's why we are number one on SUV revenue market share, and that's why we are number one, number two, even on volume market share, in spite of having the highest average selling price in the industry. So we have seen a significant improvement in the overall delivery. We also put out a plan for the pace at which our capacity increase will happen in SUVs. We were at 19,000 a month, like I said. We now have capacities which have gone up to 39,000 a month. We're not able to fully leverage all of that because of uncertainty and volatility on semiconductors, and we've had some concerns on affecting a couple of our models. And then over the next 12 months, that's going to go up to 49,000 a month. So we've invested in capacity creation as well. On the LCV less than 3.5 tons side as well, we've seen very, very good traction and movement, where we've gained 5 share points, taking us to a level of about over 40%, 44%. So I think in the two key segments we play, we've actually converted demand into volume. The fact that there's more demand coming in, and hence waiting periods have not come down as much as we like, is something that we hope we'll resolve as we go along. But I'm just correcting to say that we've seen very strong absolute increase in volumes as well, and that's translated into very high profits. We have delivered our highest ever profits of 2029 on the auto farm side, which was a growth of 52% over the same quarter last year.
Right. Rajesh, so has the waiting period come down or not?
Yeah, the waiting period has come down, but not enough to make either customers happy or anyone of us happy. But it has come down by a couple of months, some of our models more than others. but there's like, we all know there's more work to be done in this space. The pace at which we're getting new orders is faster than the pace at which we are able to supply. So we do have a backlog, and new orders is still coming in at a very strong pace.
That's good to know. Good morning, and I wanted to also understand, because as part of the host of SUVs that were launched, there was also the announcement and launch of EVs. So what's next? What's in the works? What's the strategy here?
So right now what we have is the product we just launched, which is the XUV 400. That's got off to a very good start. We'll start deliveries of that in March, but we did deliver the first of that, which is a one-of-one vehicle which we had auctioned out, and we delivered that on the 10th of February at this lifestyle event in Hyderabad. That got auctioned at a little over 1 crore of rupees as a one-on-one, and of course that money will go to some of the winners of our sustainability championship, as an award, or to a charity of the choice of the auction winner. But that has got off again to a very good start, and we've got over 15,000 bookings in just 13 days of opening bookings.
Since we're talking about EVs,
And
Rajesh,
then of course, sorry, as I mentioned earlier, we have a stream of born electrics. Yeah, sorry, go on.
No, please finish your point.
Yeah, we have a stream of born electrics. We spoke about some of them, and that will be launched towards the end of 2024, going through 2025.
Okay, one last final question on EVs. I know you've gone on record telling me that the focus will always be ICE engines, and that they will have a larger, a pie in the entire segment as opposed to EVs. But considering EVs are all the rage right now, and you are also, coming up with more and more launches, where do you see the EV segment for SUVs particularly going forward? And are there more launches that we can expect after XUV 400?
Yeah, so as we've said in the past, and in my earlier conversation with you as well, in 2027 we would expect 20 to 30% of our portfolio of SUVs to be electric. Of course, that could be higher if regulation comes in, mandating more electric vehicles, but we think that's a very good, healthy pace. So our focus is on driving electrification rapidly. We think 20 to 30% in the next 4 to 5 years is a strong ambition. That would translate to roughly 180,000 to 200,000 electric SUVs a year, which is a good number. We do believe that this segment will be very amenable to moving to electric. And when we are saying that we expect ICE to remain strong, we are saying that 70% in the next 4 to 5 years will still be ICE vehicles, and that's by itself a strong number. So, I think over the next 5 to 7 years, we will be straddling our strategy of having strong electric portfolio while consolidating and building on ICE, and we'll need to have both going in parallel.
Wrap it up with one final point. What has worked like a charm for Mahindra & Mahindra is the fact that SUVs become the mainstay for the automotive business, and it's now incremental 40% sales are coming in the car category from the SUV category. Do you see this as a multi-year trend? Next 5-7 years, do you think this trend is real and it's here to stay?
Yeah, we do believe that SUVs will be mainstay in the Indian market. Sorry? Yeah. So I was saying we do think that SUVs will be mainstay in the Indian market because there are multiple enabling factors. One is, the SUV gives you a position of height, typically, which allows you to feel like you're king of the road, and that's, a great feeling many consumers really value. Also, in some cases, Indians do like to have the greater space because we still do have joint families, people visiting often from family or friends who like to go out, so there's that as well. And then there is this whole thing of let's get away from, the city life that we live and get out. In India, as road infrastructure is improving dramatically, and we're seeing multiple projects playing out. The latest was announced just yesterday. Will enable people to get out and do much more intercity driving, for which SUVs will be fantastic. So we actually see this, growth in the category as a key factor going into the future. And unlike many other parts of the world, here SUVs, are defined in a way that includes crossover platforms as well. So, SUVs are cutting across price points.
Pleasure interacting with you. Thank you so much for taking time out and joining in, giving us a view on all those new launches, what's in the pipeline, as well as the strategy for EV. That's the word coming in from the management of M&M. Just a quick check-in as well as to what the stock price is up to. And as we speak, currently quoting at about 13.55. Tell you what, we'll take a very quick break. Don't go anywhere. We've got lots more lined up, including chartbuster ideas.